Hi guys, welcome to Industry Insights. I'm very excited today. This is hopefully not the doom and gloom chat, but a real take on what's going on post-budget and with what's going on around the world. I've got Western Sydney's leading commercial agent, Director of Ray White Commercial Western Sydney, Peter Vines. Peter.
G'day.
Welcome.
Yeah, thank you. Thanks for having me. Appreciate it.
Very excited to have you.
What an
here.
introduction.
Well, let's hope we don't peak at the intro, eh?
It's all downhill from here.
Yeah, that's it, man. That's it. I really appreciate you joining me today. This is probably the most volatile market that, like, we've been doing it for a little while, but it's the most volatile market I think I've ever been dealing with. So I'm wanted to get you on to share with our audience what we're really seeing on the ground in terms of deal activity, challenges, and hopefully some green shoots that we can offer for everyone to navigate out of it. But before we dive in to what's going on today, can you just share with me and our audience a little bit about yourself and your history before Ray White and what you guys are doing now?
Yep. Thank you. I really appreciate you. I was very, very flattered when you called as well. So I left school when I was 15. My dad had a residential real estate business in Potts Point, and so I went and started working with him the day after I left school. It just wasn't the right environment for me to sort of learn. And then I went and was doing started on reception and then did some leasing and property management, which was pretty colourful in Potts Point. King's Cross, it's like pretty interesting area.
You survived?
Yeah, just a couple of times. It was pretty hairy, but so did that, and then moved overseas. Moved to London when I was 19 and started selling apartments and houses in South Kensington, which was a lot of fun. Like I didn't have to look for the stock myself. I would just deal with people and try and sell it. Moved to France. Went and learned French, did babysitting and nannying because I couldn't speak French. Went and eventually started working at CBRE over in Paris. I had a real estate background, had family in real estate. My brother worked at CBRE in Shanghai at the time, I think, and my ex-brother-in-law was very senior at CBRE in Sydney. So it was, came back from overseas and had an opportunity to go out to CBRE in Western Sydney. Was there for sort of 13 years doing pretty much what I do now, investment development. Ended up there very much by chance, I feel, but for whatever reason, I've been lucky enough to be taken in the right direction for me. And then almost 7 years ago, my wife and I bought the Ray White Western Sydney franchise, Ray White Commercial Western Sydney franchise. So that's been a fantastic adventure. COVID hit 6 months after we started the business, which was pretty interesting. But just I feel very lucky, and it's been a real kind of adventure. I think the opportunity not only be an agent, but also kind of grow a business is something that I've really enjoyed doing. I certainly don't do it all by myself because, I'm really not that, I'm very good at certain things. I'm very poor at other, but at least I recognise that. So I know where I need people to fill in those gaps for me. So that's really kind of been one of the best things is our ability to attract the right people to fill in kind of the right positions within the team.
Because you've got a very diverse business now, don't you? Like, you're operating across a range of asset classes. Yeah. So can you just, like, you're typically, seems like major transactions, but you seem to have specialists in different parts of the business?
I mean, it really spun out of my experience at CBRE, and it was, having areas of specialisation. But I very much, when I, went and built a relationship with a client, I wanted to be able to deliver a result for them, whether they wanted to sell industrial, a hotel, they needed property management, they needed sort of valuation. My idea was that I could service them across the whole thing, but that they would feel comfortable with me advising them, but with the experts beside us. So, I mean, I'm not comparing us in any way, shape, or form to CBRE as a business, but that was sort of the idea, was that environment where they kind of stay in our ecosystem and get looked after.
Okay, nice. And in terms of market share, you've obviously eaten up quite a fair bit out there. How would you say your business sits amongst your competition in that part of the world, without giving yourself too much of an ego boost?
I don't, and I don't believe that, like, I think it's, we have a long way to go. It's sort of, I think that the other, like, we're doing okay, and yes, we've taken some market share. I think over the next few years we will take more, but it's there's areas where we're certainly nowhere near number one, and so we've got a lot of work to do, which excites me. Because I think that we can be better than we are, and I think we've got a big trajectory to kind of go from here. So I really love that. Yeah.
Well, outside looking in, it's exciting to see it happen. I'm sort of glad we're not sort of competing too much in the same field, so we can leave each other.
We're always good competitors.
Yeah,
it was always good fun.
That is, it is. Just share with me though. Like, I know I've got my own thoughts, but there's being a quality agent and there's being a quality business leader.
Yeah.
They're not always the same thing.
No.
What have you, like, you've had a good grounding in getting your agency skills from CBRE, but what have you sort of had to learn on the run and develop to become a better leader for your business?
Yeah, good question. I think, look, and that was one thing I think, having been in other businesses, was not always, it's often the best agents who get promoted, and they're not necessarily incentivized to be good leaders. The skill sets aren't necessarily the same, right? And so, look, my style of leadership is I can't think of any other word except visionary, because I try and paint a picture of where we're going. Yeah. I mean, what a wanker I sound like. But it's not designed to, it's more like I have a very clear vision of where I want us to go, and I try and get everybody moving in that direction. But I'm much more of a, like an inspirational leader than I will not micromanage people. I have no interest in doing it. Yeah. I feel like you're either on the journey with me or you're not.
That's it.
And so I think it's quite, the people who we've attracted want to do business in the same sort of style. And it's, my whole philosophy is about lifting people up and lifting their profiles, and the rising tide lifts all boats. Yeah. I have an incentive to do that as well, right? Like I feel like as somebody who tries to set the culture, it's very important that the people who work with us are aligned with that culture as well. Because from a customer service perspective, but also from just a human perspective, I think we're all trying to be better humans all the time. And when we become better, when we become more skilled, when we become better negotiators, we add more value to our clients. And so it's really sort of, that's the type of leader who I try and be. But certainly, I think, patience is something that you learn. I think you learn that becoming a boss, right? You learn that becoming a parent as well. You have to become more patient. I think I've learned to be far more analytical of myself and work out where my insecurities lie as well, because we're not all the same. And so when you're dealing with lots of different people, particularly like when you get to a certain scale, you're dealing with ego, you're dealing with emotion, you're dealing with all these different, emotions which are part of life, but not necessarily part of when you're just a sole trading agent, right? Yeah, I mean, egos are everywhere, but there's a real sort of balance there. And then, there's a lot of stuff which I have just chosen not to get better at and allow other people to do, because I'm not interested in it, because I don't see, not that I don't see value in it, but I'm not the best person to do it.
Yeah.
And so I think, my ability to see those skill sets that I need in different people has, I think it's getting better. It's still a work in progress.
And you've set interesting point in terms of like you share the vision, or you pitch the vision, and you carry those that are on board with you. What about, I mean, I've noticed a massive cultural shift because a lot of the agents seem to be in that, I would say, in that early 30s to mid 40s is like the age bracket of, I guess, most of the ones that seem to be doing really well. What about the next wave coming through? Like, I don't know how you're seeing it. I'm really struggling to find people who share the same level of motivation and desire that we had when we were young and coming through.
Yeah.
Are you seeing the same thing? And what do you put that down to?
I think, look, um, there's certainly an element of instant gratification and an element of, in certain parts, entitlement. I think the Instagram generation has a lot of false belief in, what life should look like, and that you can be like an overnight success. And the Lamborghinis and the holidays and the private jets. I mean, it's a fictitious life for the majority of people. Very few people will have that life, and so I think it can't just be about money. It has to be about something more than that, because what we go through to start, particularly, is a real grind. You have to have a real tenacity.
This was, and that's the part I'm so where I think there's that we're struggling within this business as well to bring that next wave through.
Yeah.
I'm saying it just like across the board. There aren't many younger agents coming through because the future of our business, or our business, is relationships. And as you said earlier, it's trust. Having people to go on the journey with you and rely on your advice and being able to offer the services to do it. That takes time to build that relationship. So what do you think our industry looks like in 5 or 10 years from now when information's a lot more readily accessible? So what does that mean for us as operators and agents?
To be perfectly honest, I think the world could be an incredibly different place. I mean, information's only going to get easier to come by. AI will obviously play a huge role. Um, I think one of the things that I identified was that it's very difficult. There's no real path for younger people to come into our business, right? Like, it's into commercial. It's a far more sophisticated person that we deal with. They're the top echelon of wealth, right? They're sophisticated people. They've made very good money from either real estate business or businesses that generate cash flow, which then they invest into real estate. And so how, as a young person, do you come in and add value to those people? And the answer is you don't, right? The only way that you can do it is by adding value to somebody more senior, and opening the door, so to speak, for those opportunities to come. So one of the things that we're really looking at it as a business, because you get to a certain point, right, where you want to spend more time with the family, or your priorities in life change, and that's very different between your early 20s, your mid 30s, and then into your 40s and beyond. And so my vision is that I see those established businesses and they don't nurture young talent coming through because they don't have a program set up to bring them in. And training somebody who's green, it takes a huge amount of time. It takes the right personality. It's not an easy thing to do. And so we've been spending, again, a lot of time on looking at how we can bring people in at different stages of understanding of real estate and teach them how to be agents, but also how to add value to a process. Right? Because I need people who can go and find business, but I also need people who can service business, right? Who can make sure the callbacks are done, make sure the door's open, make sure the marketing's presented. But there's all these other jobs along the way that need to be done and need to be done well. So I think, coming back to your question, I think I do think there is still these young people coming through. I do feel like there is like a bit of delusion, particularly at certain places. But those people come and go very quickly because it's not the real world. And so you find people from the country or people from various places who have that grounding and that innate drive last, and the others don't, because it's a glamour thing. They want to be you know, like our friends in the eastern suburbs selling, you know, trophy houses and stuff. It's a very different space. Look, I think, you know, AI probably changes everything. I think it changes everything for everyone. At the moment, we're just, you know, we are adapting to AI where we can in terms of, you know, property management. There's a huge lot of time savers with AI with that. It also has the propensity to be a real time zap because people spend a whole lot of time doing something through AI that they really should have used their own brain to do, and that they spent so much time correcting it afterwards that the result is not there anyway.
Yeah.
I think it's actually a bigger opportunity, right? Because I think that there will be a huge lack of people who can critically think for themselves. They won't have had to critically think, right? Like you think of the problems that you solve. There's value in that. One of the reasons you get paid like you do is because you fix people's problems, you help solve problems. Yeah. When we lose the ability to critically think, we lose the ability to solve people's problems. And so I think that while things will evolve and, you know, things will change, there will be fewer people in the industry. I still feel like there is a huge place for us into the future.
Yeah.
So it's I think it will be a very different landscape. But I think, you know, the young people they will have a much harder time.
Yep.
You know, and I think comparison, right? When you start having that, when you start comparing yourself to others and looking, particularly in this Instagram generation, it's pretty.
It'd be pretty daunting.
It's very daunting.
Yeah.
I mean, like, yeah, everybody's driving Mercedes and Porsches and stuff like that's like, that's lovely.
What you roll up in today?
I've got a Tesla. Yeah.
I'm saving money.
Okay.
By not paying for fuel.
There you go. There you go. Now let's talk about some of the challenges, and you know, I touched on it earlier. This is probably the most in the sites market anyway. It's the most volatile market I've worked in. I started my career in GFC, and I think this is I think this is harder.
Yeah.
Maybe I was a bit more ignorant back then. But you know, can you just give me a snapshot? You work across a range of asset classes.
Yep.
General sentiment from investors and buyers right now. What's the temperature?
Look, I think good real estate is good, right? So I think it's when markets are more challenging, people go back to fundamentals like who is my tenant? What is the lease? Am I responsible for land tax? What are the increases? Is my tenant going to be solvent? Are they likely to continue to trade? Is it in a good location? You know, because when the market's frothy and bullish, people will buy in. Yeah. I mean, some of the stuff that has been sold and the yields that people have paid for it is eye-watering. And so I think that investors will still buy quality, but the stuff that we're trading is where owners will meet the market. It's not, I'm going to set a record. Those days at the moment are gone, unless you have something which is unique, right? Like a school or something, you know, like a place of worship, something where somebody has to own it. You know, a heritage building that's unique, or it's a penthouse or whatever it is. But that's the exception, it's not the rule. So that's, from an investment perspective, I still fundamentally see there being money out there for stuff, particularly, I mean, the people who are out there at the moment are sophisticated people, right? It's the smart money who's out there at the moment.
More opportunistic.
Absolutely. But if you're buying at the moment, you deserve to be rewarded, right? Because there's plenty of people who are sitting on their hands. Yep. And I think that the people who have the courage to go out and buy at the moment will be the ones who get rewarded, because they're setting the trend. From a development perspective, everything is challenging, you know. I think, and we deal across not just resi, right? From a development perspective, we're across industrial, retail, commercial, aged care, seniors living, yada yada. So subdivision and townhouses, people love. You know, they're not making any more land, right? So anything serviced, subdivision, people love. There's no scale. Anything kind of, you know, industrial. The biggest challenge that we have at the moment is construction costs have increased, same as resi. The land values, even if they've moved slightly, cost of money's gone up. So the rent that you have to get from these things is exorbitant.
Yeah.
You know, and the rents went from like 100, I'm talking generically, but in Western Sydney, they were around 150 bucks a metre. We're at 250 a metre now, right?
Yeah.
So now incentives are starting to blow out, but it's sort of at a point where for many of these businesses, they're at the inflection point of,
Can they actually afford to do it?
Like,
you put interest rates up, you slow down the economy, but people don't have more money, they have less money, right? And so it gets to that point where businesses can't afford to do business. They're getting squeezed. They're getting squeezed on their margins. All of their costs have gone up. So there is a bit of an imbalance in that space. I mean, residential, like, I have this conversation daily with people. I don't know, honestly, I don't know what the answer is, because construction costs.
I mean, without saying it too simply, but it's fucked. Like pretty much southwest of Canterbury, Campsie,
Yeah.
further west of Rhodes.
Yeah.
That's it.
yeah.
Pretty much. I don't think it can work anywhere else.
Well,
You know, but you have some groups out there, right? And it's only a builder developer who would go anywhere near beyond there, and a lot of them have left, obviously.
Yeah, they're all coming back. They're all coming back this way.
They are. But even in fairness, outside of the West, I think there's other challenges in the market outside of that. You know, everybody's been targeting the downsizer market, so we go and deliver a whole lot of product for the downsizer market.
Yeah.
The world changes, and guess what? The downsizers don't sell anymore. They stay where they are. There's not that ferocity of, oh, we need to replace it. We're going to go and buy a beautiful apartment. And when they do, they're so picky.
Yeah.
You know, they don't buy off the plan. They wait till it's very close to completion or at completion, because they want to feel, they smell, they want to touch, they want to see what their view's going to be like.
Yeah.
You know, and your propensity to get it wrong when you're doing luxury, because people have choice, right?
Yeah, of course.
If I have that sort of money,
Yeah.
I have choice.
Yeah, if you got over $4 or $5 million for an apartment, you've got plenty of choice.
Absolutely.
Yeah.
And so, you know, I'm picky.
Yeah.
Which, you know, yeah, anyway, there's all sorts of challenges out there. But I mean, I think, I don't quite know. The only thing that I can see changing is that prices have to go up. And so I don't think prices can afford to go up at the moment with the increase in rates. So I think that nothing happens until the rates start to come back down, which inevitably they will, because, you know, we always overshoot in terms of our raises. They come back down, you know, but it's a question of when, right? And nobody knows when. Everybody was mid last year. Everybody was saying at the end of this year it's all right. So I don't know. What we know is that, you know, there's a lot of people that want housing. They don't have it, but also we still have a skill shortage in this country. Ever since COVID, you know, people left. We're not training enough people. There's a whole lot of guys going up to the Gold Coast. They'll be going to Brisbane. Like, it's really, you know, we've got all these government infrastructure spending programs, which, don't get me wrong, are also what's driving our country. But there's a double-edged sword, because it's creating inflation and it's also taking skilled labour away from construction as well. So it's not a short-term solution. You know what I think is working and can work more quickly is land release, because people still want to buy a house and land, you know, even if they're further out. But if we can get servicing into those places, I think we can be delivering more housing. But again, it's, you know, we've paid for this infrastructure, we need to pay it back.
Yeah, that's it.
It's a real, there's no simple solution.
So you're seeing pressure on pretty much every asset class that you're working across.
I mean, even where, you know, people see that there's opportunity, there's risk as well.
Of course.
You know, like
And that risk's just getting priced in a hell of a lot more than it used to.
Yeah, because
people weren't pricing it in before.
Yeah.
The market was so bullish, you had to buy.
Yeah.
But everybody's been burnt in that. Well, not everybody, but a lot of people have built and developed in the last 5 years and not made any money.
Yeah.
Right? Their net profit would be zero. They've probably gone backwards when you look at borrowing as well. So,
Well, the scary part is, I mean, most of the builder developers I talk to, they can't even give me a proper number. Like they say, oh, it's in this number. But I spoke to a developer last week and he said, just finished a block of 200. I said, what did it end up costing you? He goes, honestly, I'm not even sure.
Yeah.
He goes, it was somewhere between here and here. Like, and if, you know, it might have even gone a little bit away. Like, that's pretty terrifying when you say that. So, yeah, it's just everyone seems to be putting contingency on construction, contingency on consultancy, contingency on all of their costs, plus charging their equity.
Yes.
Never used to charge equity.
Yeah.
Everyone charging their equity now up
Yeah.
7, 8,
Yeah.
9%,
Yeah.
plus putting their debt costs in at a much higher number as well. All it does is just put pressure all the way through the feasibility.
It does.
And land values can't really move that much more. I mean, in certain areas, obviously they can, but like in the West, they can't. Like it's
Has there been a major site sale in Western Sydney in the last 12 months for resi?
Structure like
land com sales.
A development site sale for 100 units or more. Has one have sold for in
Only like structured transactions that I can think of. In fairness,
no outright purchase, right?
I can't. I honestly, I can't think of any.
Yeah.
I mean, but in most of the areas, like if you run a feasibility on something, you're at a negative land value.
Yep.
You know, like goes back to what you were saying, because there's only so many builder developers out there who can do scale.
Yep.
Right?
Agreed.
because a lot of
Them
them.
have gone.
Yep.
So yeah, look, it is challenging and will continue to be challenging. But I think it's like anything, right? If there's enough pressure on something, at some point something has to give. I mean, I think that we really need, and I'm talking about you know, as a country, particularly Sydney as a city, we need institutional grade investment in build to rent, right? Like, and I understand the returns aren't that are very questionable, and you need very passive capital. But if you look across the world, right, like in Paris, 70% of people are tenants, right? You look across the UK, it'd be similar. And I think we're moving much more to a country of renters than we are a country of buyers, because trying to save up for deposits and all those things, it's beyond, like, affordability is gone.
Yeah.
You know,
But we've got no chance of hitting our housing targets unless it's all institutional grade ownership. I mean, I'm convinced. I've pegged my entire management business against that bet.
Yeah. No.
Like, it has to happen.
I completely agree.
Yeah.
Because it is the only way. And until it happens, rents just keep going up, right? And so if we want to ease the crisis, we need more housing, but it's not going to be private. Also, like, you know, it's
Well, especially not now.
dream of, you know, owning your own house and stuff like that. For a lot of the younger population, we were talking about them before, right? It's not the Australian dream for them. Their dream is to go and travel overseas, to have 3 holidays a year, 2 holidays a year, to spend their money. Like, they're not thinking, oh, I need to build wealth like the immigrant generations that we've had, and that I must grow wealth, I must grow wealth. They're more concerned about living.
Yeah.
And so when you're more concerned about living, why are you going to go and spend all your money saving for an apartment? You know, like, it doesn't make sense. Or maybe the rent fest thing, you know, is a thing, but try and save a deposit. Like,
Oh, we did it. We did do it.
we did. Yes, we did.
Yeah.
We did. But I don't think that everybody will.
Yeah.
And without the bank of mum and dad, maybe, which is maybe then what happens. But it'll be interesting to see.
Yeah.
Look,
We need more housing. Yeah.
without a doubt. What are you telling your clients now? My phone has never rung as much for people who want to sell sites. What do you, to even vacant industrial property, vacant commercial properties, sites, what conversations are you having with your clients now who need an outcome? Not who want an outcome, who need an outcome.
If you need an outcome, you need an outcome, right? I think it's more about if there's existing improvements on there, it's can we generate, how are we positioning the property, right? Because if we just try and sell it as a site, we're going to get absolutely slaughtered. We probably, like, you know, you talk about value. Value is so hypothetical in a market where you may not have a buyer,
Yep.
right? So it's ideal if there's anything on the site, because at least you can generate some income to hold it, right? People want holding income
Yep.
with a site. It's more where you're looking at stuff and it's like, even if I get it cheap, I genuinely don't know if I can sell it. I don't know if there's any buyers for it. You know, you try and have a conversation like that with an owner.
Yeah.
Try and have a conversation with an owner who got offered 100 a site, 150 a site, and you're telling them that their value might be 50 a site.
Yeah.
Like,
If you can find
they're
someone.
looking at you going, this bloke's, you know, he's off his head. He doesn't understand.
Yeah.
We're lucky in that the majority of people we work with are sophisticated people, right? So that they're very well aware of what's going on. And typically when they come to us, they do come because they need a result. They're attracted to the way we do business, and we will get them the best possible price. We will think about all the options, all of the potential users to make sure that they get the best value. But if they're trading, they are trading, you know, and that's all we can do is get them the best result possible. If they don't have to sell, the conversation is, it's not the right time. Go and work on planning, you know, get that set up because the market will run again, but it's just not right now.
Yeah.
Depending on what it is. Yeah.
Yeah, and that's my first conversation with everyone now is, do you need to sell? Because if the answer is like, honestly, it is, because why would you put something up for sale? I mean, I'm finishing a project myself in a month, and I'm like, said to the other investor, I said, I think we just shelve it for a year. I just let it sit empty. I go, it's probably the best outcome.
Well,
You don't want it to be secondhand. You
Yeah,
don't
that's
want it
right.
like you probably, now's probably, it's certainly not the right time. I mean, confidence is low, right? I mean, you're looking at the confidence index, it's like below what it was people were talking about during GFC.
Mate, it's the worst. These are the worst business conditions I think I've ever seen or I've ever felt. It's been the worst since I've been running the business. It's 6 years. Definitely the hardest sites market I've ever worked in, and that's 15, 16 years. So it's
but
How do you get excited about something? I still think, look,
how do I get excited? Well, answering your question, it's very simple. You got to have owners who are on board with the strategy, and as you said, like I mean, we're past the point, I think, of the hard close on getting listings. Because you and I both know, as soon as a deal comes across your table, you'll know within 5 minutes your probability of selling that site.
yeah.
If it doesn't get to that 50 to 80%, like I don't get that sort of energy off it.
Yeah.
Unless it's dirt cheap, I won't get involved because it's just, how hard it is to get one sold.
It is.
it is, it is.
So, what if you're putting your personal investment hat on?
Yeah.
What are you doing right now?
I'm buying land with holding income, if I can. I do like, I'm starting to think like office, you know, which is very kind of,
Interesting.
well, nobody else is,
Yeah.
right? So, you know, there's like, I like counter-cyclical. The thing about counter-cyclical is, it's sort of, you got to like, it's a high risk, right? But I remember back 2010, 2011, before it started running again, and it was like nothing made sense. Nothing made sense. And then we look back 6, 7 years, 6, 7. And then you look back and you go, oh, they bought that so well.
Yeah.
How did they buy that so well? They had the courage to go and do it when nobody else wanted to do it. But fundamentally, like, holding land is hugely problematic unless you're buying all cash. You don't want to be borrowing because you could destroy yourself with the interest, right? So I think I would be trying to buy something which was either undermanaged, underloved, under-rented, underperforming, and trying to, and you have to have a deep understanding of real estate to do that. But I like anything where there's already something there.
Yeah.
You know, I don't need to build ground up. I don't need to go into the basement. I'm not relying on building a big site. I'm going to look at that underloved opportunity where I'm opposite a vendor who has to trade.
Yeah.
It's about the vendor situation, right? And so I think anything where I can generate income, I really like.
And locally in your part of the world that you're operating in, where are the hot pockets of or areas of Western Sydney? Obviously, got the airport opening soon, but where are the areas where you're seeing a lot of investors gravitate to or show a lot of, when you do put something up, a lot of interest?
yeah, like little groups of neighbourhood shops people really like. Back to basics, you know, that drive up, convenience retail, good quality tenants. I think they're probably somewhat suburb agnostic. Like I've been banging on about it for a while now, but I really like St Mary's as an area. I think, you know, with the metro coming through from the airport, I think that's a real kind of opportunity. ALAN did a very a good quality development there, probably 5 years ago now. And I noticed the style of people who were moving into the area started to be these young couples, trendy, you know, and so started to change the retail, the gyms that were there. Like you just start to see this changing. Penrith as an area, I think, I mean, you know, it has a huge amount of wealth out there. There's some people who are doing very well selling apartments out there. So I think you need to pick your pockets. You know, the airport's a very interesting opportunity. There's a lot of land out there. You know, there's a lot of land, there's a lot of unserviced land. So I think it's a long-term journey, right? It's not a get-rich-quick scheme. And you have to carry the land.
Yeah.
So the moment you're paying land tax on it, and it's not primary production anymore, it's not a principal place of residence, you know, like holding land out there
Eats up very quickly. Yeah.
very quickly.
Yeah.
You know, again, so all of those sorts of costs, I think, yeah, you need to be picking where you do it. I really like blocks of apartments. I mean, I know that with some of the proposed changes to the budget, that doesn't look as sexy, but those values keep climbing. Rents keep climbing. You're not having to build. You can refurbish, you can renovate. And you know what? Like, they used to build them well. I'm not saying that everybody builds poorly now, but the construction, those 3-story walk-ups, you know, like a bomb would go off in them, and you'd still have most of a building there. Like they were built well.
I hear you.
Just there's something about that. I mean, they're certainly not the most attractive things in the world, but they're solid. They're practical.
Yep.
There's just something I really like about them.
Yeah, I'm with you on the existing residential below replacement cost in a good suburb. Like it's bulletproof.
It has to be.
Yeah, it's just again, what are the tax changes and how do they affect it? I think everyone who's bought an apartment block that's non-strated in the east on a yield of like 2%, I'd be pretty nervous if I was them. But
And the land tax is it's very high in those areas, and so it makes holding stuff prohibitive because, you know, you're holding it with such a low return. Some of the stuff I've seen, development sites, particularly like along Parramatta Road, you know, those land taxes have gone up so much. It's like, yeah, it's almost negative.
Yeah.
You're almost losing money on the property, even with a tenant there, because of the holding costs.
yeah.
Like, why do you hold it? You get to a point where it's like there's no point anymore.
Yeah, and I guess this is the part that a lot of people don't see, right? It's unless you're actually boots on the ground.
You don't.
Even our regulators and our policymakers, I think they're fucking so detached from reality anyway. So let's finish on a sense of optimism.
Yes.
What gets you excited? What gets you out of bed every day? And what's the next 12, 24 months got in store for us?
I'm the fundamentals of Australia are very strong. We're a fantastic country, right? We've got a huge amount of skill here. We've got a lot of very good things going for us. We're one of the safest countries in the world. I think we will attract overseas investment because of our stability with governance. People may not like certain political parties at different times. Things change. Obviously, we're heavily taxed, but I think from a country, we're a very safe bet. We're a very wealthy country. And so it's a great place to invest. And so I think that, we look good from an international perspective. On like a micro, sort of a more local perspective, I like Western Sydney. I think Western Sydney is where the growth is. Population growth, price growth, the infrastructure spend. I mean, Westmead Hospital just keeps getting bigger and bigger and bigger. Like, it's an epicenter. Yeah. And so I really like it as a region to invest. From a personal perspective around the business, I'm incredibly excited because I feel like we have gained good traction in the market, but I think we have a huge amount more growth opportunity. And I think that with the changes to AI. We are a very dynamic business. We can adapt very quickly. Others may not be able to. And so I think that businesses like ours that are based on culture, that have a strong sense of identity and direction is what people will be drawn to in the years to come. And the other thing is this is a difficult market, right? So people are attracted to people who can do deals, right? So we will continue to take market share in this business because we've done it before.
Yep.
We know how to do deals. We understand how to manage a process. We understand who to speak to. And when people want to trade, I think there's a flight to quality, not only with assets, but with agents as well.
Absolutely.
People who are proven. In a bull market, who's going to give me the lowest fee? The thing will sell itself. That's not the market we're in.
Yeah.
And so I think, there's an opportunity to gain kind of further market share in a difficult market and then come out really well positioned in 12 to 24 months.
Yeah, I'm with you, man.
Yeah.
I'm with you.
I think it's,
Well,
interesting time.
it is. Look, I took out of that we should be charging more.
Well, everybody's costs have gone up.
Yeah.
I mean, like we've been charging the same fees obviously the values have gone up as well and stuff. But yeah, no, you always need to be charging more.
I'm with you, mate. Our fee, mate, if any deal that we can
good
do.
value.
Yeah, absolutely. It's an outcome.
Well, but we don't get paid if we don't sell it, right? And that's completely out of our control whether a vendor decides to do something or not.
Yeah.
So anyway,
A lot of fun, a lot of good times ahead, mate. I appreciate your time today. It's going to be, maybe we should do this in 12 months' time, and let's see if we're feeling as optimistic. Watch this back and see how it is. But
this guy will be ahead.
yeah, look, I think the sun will almost be out.
Absolutely.
Mate, appreciate it. Thank you
My
very
pleasure.
much.
Thank you for having me, my friend.
All right, beautiful. Thanks, guys. I'll link in Peter's details below for those of you who don't know him. But without a doubt, number one operator in Western Sydney. So we collaborate on a lot of deals. We share a lot of IP. So if you need a contact, you need an intro, reach out. I'd be very happy to introduce you to Peter. Make sure his team looks after you.
Thanks,
Thanks so much,
Thanks,
mate.
Peter.
Cheers.
Perfect.